Good evening, and welcome to the Nightly Market Brief for Thursday, June 11th, 2026. A fast-tracked peace agreement with Iran completely dominated global capital flows today. This is not just another vague diplomatic statement. It's a concrete deal that opens up Iranian oil exports to the global market in exchange for stopping future enrichment and immediately surrendering their highly enriched uranium stockpiles. Unlike past failed talks, this deal has immediate binding backing from European maritime insurance networks and major Asian energy buyers, which means millions of barrels of crude are legally cleared to hit the water right now. The reason it's going to work this time is driven entirely by economic necessity on both sides. Iran desperately needs its frozen cash reserves unlocked to stabilize its domestic currency, and Western governments are aggressively backing the deal to contain energy inflation that has been forcing interest rates higher. For the stock indices, this deal represents a massive sigh of relief. Cheaper oil acts like an immediate corporate tax cut for the entire economy, driving down transport, manufacturing, and shipping costs for giant blue-chip companies, which is exactly why it injected a powerful burst of relief buying into the market. Moving over to the metals corridors, the sudden collapse in global energy inflation metrics triggered an intense round of short covering. Precious metals faced heavy accumulation as macro trading platforms aggressively rotated capital back into defensive tangible assets, driving gold and silver up sharply throughout the session. Industrial copper and platinum tracked right alongside them, remaining firmly supported by tight global warehousing buffers. In the energy lanes, the physical reality of millions of barrels of Iranian crude hitting the water completely changed the market structure. Trading desks aggressively wiped the remaining geopolitical conflict premium straight out of the front-month delivery lanes, forcing a major correction lower across the petroleum complex. Concurrently, main currency corridors posted modest gains against the US dollar, as international asset allocators balanced out shifting transatlantic trade metrics. Inside the crypto complex, digital assets moved in lockstep with the broader equity markets. Bitcoin experienced a wave of sympathetic short covering as automated execution scripts covered near-term short overlays to match the massive risk-on rotation sweeping through global risk assets. Meanwhile, the interest rate grids faced intense, defensive adjustments. Fixed income desks began skeptically pricing in the easing inflationary pressures from the energy sell-off. But the paper grids remained extremely nervous heading into next week's Federal Reserve statement. Compounding that anxiety, the added uncertainty surrounding the new Fed chair, Kevin Warsh, added significant fuel to the market's uncertainty. Finally, agricultural and soft commodities turned in a weak session that ran entirely on supply chain improvements. Grain corridors faced heavy overhead selling because updated weather maps confirmed excellent Midwest crop progress. But the downside accelerated sharply as the massive drop in crude oil aggressively drove down forward farm and energy production costs. Also on the soft side, cocoa and coffee contracts consolidated within highly controlled boundaries, completely ignoring the geopolitical noise sweeping through the financial space. To see the opportunity and the trends we're tracking, click directly on the live charts linked on this page. For more on how to qualify tradable trends and the strategies to capture them, Knight's senior analyst, Alex Thorne.
Thanks, Michelle. Today's massive rotations are exactly why tracking backward-looking headlines is completely useless to your balance sheet. My daily job as a senior analyst here at Knight is not to predict the future or tell you why a market moved after the fact. My job is strictly to filter out the noise, qualify 40 highly liquid global macro markets, and pinpoint exactly where clean, tradable trends are occurring right now. Mr. Knight's cardinal rule at our desk is simple. Your capital only grows when you stop playing profit and expend your energy being on the right side of the move as it occurs. Speculating on yesterday's news or guessing tomorrow's headline will not make you money today. To prove this point, Use the live charts linked and the simplified procedures disclosed on the EMA analysis page. They'll provide you exact entry and reversal levels for any of the 40 markets, trading any duration from hourly to weekly. Then audit the performance for yourself. Once you've qualified the credibility, profitability of our methodology, our team can automate order entry in the sectors of your choice. We handle all the daily execution work using Chart VPS and CQG integrated client, routed through the clearing and exchange member of your choice. Then monitor all trading activity to ensure it's within your defined guidelines. Contact Peter directly to explore the benefits of putting our professional trading team to work directly for you. Thank you for watching. Good trading, and we'll see you right back here after tomorrow's regular session settlement.